never going to get the timing perfect, but you'll exit before it breaks down. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Welcome, everybody, to another episode of Talking Trades. Of course, Kevin Wadsworth and myself, Patrick Karim. And today, Kevin will help you trade silver. How can you trade silver and how using charts can help you do that? Kevin.
Okay, sure, Pat. I think if I bring up the chart for silver, what I'm aiming to do here is to just give you some pointers how technical analysis can help you to trade the chart. So, or to trade the instrument. So whether it's silver or whether it's gold or whatever it happens to be, we often get caught up in the narratives and the news headlines and what happens to be the latest story about what's driving the price of silver. Is it the demand for solar panels, for example, or is it the industrial demand? What is it that's likely to push the price of silver higher over a particular period of time? So I'll share my screen and we'll take a look at the silver chart. And what we're looking at here is the silver chart back in the late 1990s, in fact. And you can put a lot of different technical indicators onto a chart. There's literally probably hundreds of them out there. You can sort of distill it down to quite a sort of fairly simple level if, when you're starting with your technical analysis, rather than confusing yourself with the stock RSI or the moving average convergence, divergence indicator and all these different indicators. They all are very similar because they derive their movements from the price action itself through price and time, so and momentum. So you can sort of cut down a lot of these technical indicators. And the ones that I've got on the chart here for you, just the moving averages. I've got the at the moment it's the 12 period and the 36 period moving average. I've got the monthly chart on here, so it's the 12 and 36 month moving average. And this red and green splodge, I like to use quite a lot. It's called the Ichimoku cloud, and it's a technical indicator that helps you to identify when you're in a bullish environment or a bearish environment, because bull markets occur above the Ichimoku cloud and bear markets occur below the Ichimoku cloud. So if we're back in the late 1990s, we've seen the price of silver declining a lot. And I'm going to hit the replay button on this so that it plays whilst we're talking. And I'll just put it into candles, and I'll just stop it at the same point again. So the chart's replaying. You can see the price action going up and down whilst I'm talking. So what do? The price has been going sideways for multiple years now, and you're looking for possibly getting into the silver market, a little bit like we have been recently. Well, you can put a series of trend lines on the chart, some sort of breakout lines, and there's a number of them, horizontal and angled resistance lines that go a little bit like this. So you can see we just hit that horizontal resistance line there, having broken out above the moving averages and above the Ichimoku cloud. So what we're looking for is for the price to break out through an important sloping resistance line. Okay, that's the red one on the chart. And we're looking for it to sort of break out through a key horizontal resistance area or resistance zone. And as time goes by, you can identify these key resistance levels. Very often the sloping resistance line is quite close to the moving averages and the Ichimoku cloud when it begins to break out. And then you get into a sort of decision zone where the price is deciding whether to break out or not. And if I just pause the chart there for a moment, you can see the price is breaking out above that sort of $7 or $8 level. There's a sort of zone of resistance close to around about $8. So on this monthly chart, you would at this point start to turn very bullish. And there's another reason to do that. It's because we built out what looks like a developing geometric arc pattern. These are sometimes referred to as cup and handle patterns. You might have heard the expression cup and handle pattern. And it's where the price comes back and perfectly touches the geometric arc. Okay, and you can see that's the cup forming. And price entered this cup in 1979, in fact. I'm just going to hit the replay button again and let it play out. So we're above the moving averages and we're above the Ichimoku cloud. So you could very well have taken a decision to enter the silver trade just as it was breaking out here. But in terms of when is a good entry point, you want to be entering a trade or a position, if it's an investment, when the price is close to the moving averages and breaking out. You see how just here, the price is close to the moving averages. This is multiple months here. This is a year of price action here, month after month, whilst the price is consolidating above that initial breakout. Then you get a strong breakout move and it's consolidating again. So if you miss the first breakout move, you're going to get another chance if you're trading. I'm not talking about investing here. I'm talking about trading, because there's a horizontal breakout line there. So if you missed the first impulsive move to the upside, you had a second opportunity here around about $14, and you get the strong upside move, and then you get consolidation. And the price can very well come back down to test the moving averages, the Ichimoku cloud, or the edge of the arc. And there you go. The price has just touched the edge of the geometric arc there. So, depending on your approach to trading and the techniques that you're using, you might think about taking positions when key support levels are tested, and then the price has a very positive upside reaction, and the price bounces strongly to the upside and back above that horizontal resistance level. So you get another opportunity to enter the trade as the price action is proving itself again here. And all the while, of course, the target is up here. That's your target area. You see the price action on the left-hand side hit a peak somewhere above $45, close to $50. So your target area is anywhere up to that sort of level. As silver price spikes, it can be very volatile and quite unpredictable in terms of whether it's going to spike to $35, $40 or $50. But the point is that as price starts to approach that level, you start to look out for signs of a breakdown, because there you go, price has hit that level and there's a big red candle there. So you'd start to think there that, that's a good point to book your profits and exit that particular trade whilst you're waiting for the price action to play out and show whether it's going to be bullish or bearish again. So, we don't know at this point quite what silver's going to do. It's reached its target. It's clearly forming some sort of consolidation or topping pattern here. Now, we can say with some degree of confidence that if price breaks below that level, then we've got a more major problem, because we're starting to develop a nice support level here. Price has reached its target. It's moved all the way up from down near $4 up to somewhere close to $50. So that is a huge move. Target reached. Okay, and we formed some sort of consolidation or topping pattern. So that is a sign that you would want to step aside and find another market that is outperforming silver, because while silver is consolidating, going sideways, you're going to start noticing other instruments, tradable instruments, that are outperforming silver. And in fact, you can see now that the price is very close to sort of breaking down below the edge of this arc. So then what we start to think is, in terms of, are we going to build a handle to this cup? This is a very large cup pattern that extends all the way back to 1979. So now you're thinking in terms of a handle forming on the edge of this cup. Now, you don't always get handles on cups. Sometimes the price just accelerates up and keeps on going. It depends where you are in the cycle, whether you're in a risk-on cycle or a risk-off cycle, where you are in terms of gold versus the stock market. But clearly here now we've got a breakdown from the edge of the arc, prices below the moving averages, below the Ichimoku cloud. And as we, at the very least, you should have exited somewhere up near $27. The target was reached, and really should be exiting on this euphoric sort of move to the upside here. Your target would have, I'll show you what the target would have been. You got measured move here. So that's your first impulsive move to the upside. You've got another measured move here as price broke out. And then you've got a completed measured move there. So each of those moves are approximately equal in size. So at the completion of each of those moves, you're never going to get the timing perfect, but at least you'll exit before it breaks down. So what you're doing is you're exiting into strength. You take the entry, you exit into strength, and then you wait for the resolution. If you don't exit into strength somewhere near the top of that green arrow, then you'll be exiting into weakness as the price breaks down. Now that's okay, because assuming you started trading somewhere down near the original breakout, that's okay. You've made some good profits, and you're not watching your profits turn into losses. And in the trading world, any kind of profit is a win, really. So you would have been exiting at the very worst somewhere near $27. Price is now down near $14, and we are 6 years later. So the price has fallen from 27 to 14. The price has gone down 50%, and we're now 6, 7, 8 years later. So what now? We're in 2020, 2021. So how do we know when to get back in? Well, that line there, that new red line that I've just put on, appears to be a very important breakout level. And there you go. As soon as it breaks out, the rapid upside reaction, and probably the back test as well, as price comes back down towards that area to back test it. So we've broken out. We're above the Ichimoku cloud again. We're above the moving averages. And if I just pause the animation, what you may well notice here is yet another arc pattern forming. Okay, so what we've got ourselves into here is a large cup and handle pattern. So you've got a big geometric arc or cup, and now you've got the handle forming here. And there you go. As price continues to play out, you will see the price moving back towards where we are today, and the arc target somewhere up near 40, 45, or even $50. So that, Pat, is how I use technical analysis to help you trade silver.
That's brilliant, Kevin. I hope the viewers enjoyed that. Guys, make sure to like, subscribe to get more content like this.